Is this the time to buy or sell UPS? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So this is the website here for UPS. Let me just go to the United States English page to see how it looks. Yeah, track, quote, ship, billing. So this is in the transportation business. Save up to 50% this holiday season. Okay. This stock is in a theme that I call residential mail. UPS is 22% from the 52-week low, 19% away from the highs. Vis-a-vis the highs, it is outperforming these competitors. But from the lows, it is underperforming. Here is the stock chart for UPS, United Parcel Service. Going way back here on the weekly data points, we have definitively seen a lot of different moves over the years. The latest pattern is kind of a bit strange. You could make the case that it's a weird head and shoulders pattern. You have a shoulder here, then you have sort of like a two-headed monster here. Maybe this is a shoulder, or maybe it's a rounding top. It's a messy pattern. It just is. But it is a pattern that you could argue it's a bit bearish because we have resistance here from the green 50-week moving average. This level was a very big deal support level. It's a huge psychological level now. On top of that, we do have the blue 100-week moving average, which also is a simultaneous resistance level. So we are clearly at resistance. When we go to the daily data points, we do see a breakout above the red 200 daily moving average, which is bullish. The caveat is that we have seen that before without it actually being sustained. So the question is whether the bulls are going to be more committed this time, especially given that the bulls now have two big deal weekly moving averages that they have to fight. Looking at weekly RSI, we are not at resistance yet, or when it comes to the PPOs, so the bulls could push a bit more. Looking at daily data points here on RSI, we are at a level that has triggered previous instances of profit taking. Looking at MACD, we are also at a level that have spooked bulls in the past. Same thing with the purple 20 daily PPO and the green 50 daily moving average PPO. This is a level where the bulls might consider taking some profits, which creates selling pressure. So in my notes, I do write 50 and 100 weekly moving average resistance. While I do like that we have been able to break out above the 200 daily moving average resistance, there's a bunch of big deal resistance level at this point. I do think I will give the bears a -3 here. I would have given the bears more if it hadn't been for that recent breakout, but the bears, they do have quite a bit of a setup. So basically, if you are a bull, you might look for better opportunities than this. Yeah. Looking to the left here, the seasonality over the last 5 years in green, 7 years in blue, 10 years in red. The average data is pretty bullish into the 21st of, 23rd-ish of December. When we look to the right, however, it changes. We do see that recently, going all the way back here to 2015 with 6.66% loss, December has not been a bullish month for UPS. When we look here to January, the next month, that also is a rather bearish month. So the seasonality here is not really that good. So I give a -6 here on the seasonality. Next, we go to the fundamentals. Looking at price book ratio, we can see here that we are at, a lower-ish level. Looking at price to sales, if we go further back, we are a bit elevated, but we are not at an extreme level, but we're not at value. Looking here at price earnings ratio, we are at a more lowish level. The yield is pretty good, 3.45%, so that's nice, nice yield. When we look here at the price targets for UPS, we do see that the average target is 1.40% above us. That's not really that bullish. So yes, the average rating is a buy, but the upside here is rather limited according to these analysts. So while there were some light points on the fundamentals, overall this is not a high value setup. As such, people that look at fundamentals are not that likely to be attracted to UPS at this point. Looking at correlations, let's change this here to the S&P 500, which is the major index, like that, the SPY. Long term, we do have a pretty solid 92% correlation with the S&P 500, 92% as well with IEIT, which is the transportation ETF, 89% with XLI. When we jump to the daily data points, we do have 80% with the SPY, 82% with IIT, and 58% with XLI. So the strongest correlation short and long term is with IIT. So IIT is going to have a pretty big effect on UPS. Yeah, so here is transportation. In this case, we have seen a pretty solid rally here from these late September lows. In this case, we did have a rally that extended for 56 days. The current rally here, it's clocking in at 63 days. So it is a bit extended. We are also approaching this green 50-week moving average, which was the party stopper for the previous rally. Looking at the daily data points, we are peaking above the red 200 daily moving average. The caveat with this success on the 200 day is that it is moving downward sharply. So it's just a matter of time until you close above it. So it's a win, but it's sort of like a very easy win. It's just a matter of time, really. You must have a very, very bearish move for price to crash so much that it is like racing away from a declining moving average. So let's now compare the SPY with the IIT like this. No, let's compare UPS with IIT. IIT like that. So what this means is that when this blue line here goes up, it means that UPS outperformed the transportation ETF. We do see that these move in cycles. So let's actually look a bit at the reliability of these cycles. Let's get this time cycle tool. Especially here on the RSI, we see time cycles. So there is a bit of a rising phase now that should be beneficial to the price, meaning UPS might outperform the ETF a bit. Looking at these daily data points, the time cycles looks they look pretty they look pretty neat, but they were not reliable. Well, they were somewhat reliable in the past as well, but there's been a bit of a shift in the time cycles, but the time cycle here is a rising phase, and that is bullish. So let's see whether the seasonality tool corroborates it. Now, UPS usually doesn't outperform the ETF. And when we look here to the right, December and January are usually months when UPS underperforms the ETF. Overall, there were some bearish points here for the relative performance analysis. We do end up with minus 2.3 here to the bears. We are at 50 and 100 weekly moving average resistance. Especially the seasonality increases the odds that these resistance levels will be beneficial to the bears. Obviously, it is possible for the bulls to break out. If that happens, then obviously these resistance levels will not be resistance levels anymore. But the data here is more bearish than bullish for UPS. So we have some time left. Let's have a look at the components of the transportation ETF. So United Parcel Service is actually on the top at 18% holding allocation. So what happens with that one is a big deal. The next is Union Pacific. This is a railroad company. Yeah, chart is a bit similar-ish. Let's look here at the daily data points here. Yeah, I mean, we are trying to use the blue 100 day here as support, but we do actually have simultaneously this double top pattern. So mixed messages on Union specific. Let me quickly just look here at the seasonality. The seasonality here to the right for December is pretty good. January is pretty weak. You can see that the strength of December is about to, well, the early gains of December are about to be given back. So December usually ends on a bit of a whimper. But let's go to the next one. CSX is the next. CSX Corporation. Weekly data points. This is also a setup where we are fighting both the green 50 week and the blue 100 week moving average. Pretty, a decent battle. We are peaking out above the red 200 daily moving average. We did that as well back in August without that being a huge win. Now looking at the seasonality here. To the right, December is a very mixed month. Recently, it's been a bit bullish, but you don't have to go that far back until December becomes a weak month. Let's quickly look here at the fundamentals. As far as price book goes, we are a bit elevated. Price sales is not like deep value either. PE is not too shabby, but let's look a bit at the price targets. Yeah, so the average upside price target is 2.6%, which basically means that analysts think that currently this stock is fairly valued. So yeah, this is not the kind of stuff that will attract bulls. Next on the list is Old Dominion Freight Line. Definitively sounds like an old company. We do have time cycles. The time cycles are here. Let me have a look here at the reliability of the time cycles. Definitively changed over time. Time cycles suggest that we are in the declining phase. Let's look here at the seasonality. So recently here, ever since 2014, December has been a pretty weak month. So that is not bullish. Yeah, a bit elevated here on the valuations, these ratios. Yeah, I mean, not really an interesting opportunity here. Nor Folk, then it should be on top. NSC is the ticker. In this case, the green 50-week moving average has been broken through, but we do have surgical-ish resistance at the blue 100-week moving average. And we have seen a protracted rally. Let's quickly look here at RSI and the PPOs. Not crisis level yet here on RSI or the PPO on the weeklies. On the dailies, yeah, we are seeing rejection from a relatively high level. Also here on the MACD, this is a level that has a bit of a tendency to create issues for Norfolk Southern. Seasonality, it's been more bullish than bearish since 2016. Looking at the average here to the right, you do see that January and February are pretty weak, and that's something we see here to the right as well. Yeah, valuations are not extreme, but definitively not cheap either. If we quickly here look at the price targets, the forecasts. So 24 analysts have a 1-year price target, and the average price target is 3.31% below us. So we looked at UPS in detail. We looked at the underlying components of the transportation ETF, and it seems like quite a few of these stocks are very fairly valued or overvalued. Now, the seasonality data also was not that good. So there's pretty decent probability now that we will see pullback on these stocks. Doesn't need to be a crash, but it could simply be a mean reversion. The people who are sitting on profits of these stocks, they do want to hold on to those profits too. So you don't simply have the bears selling, you also have bulls who have stops, and when those stops are triggered, they add to the selling pressure. So there's different types of selling in the market. You have despair selling, you also have happy selling. But selling is selling. If you have more sellers than buyers, then a security will go down.